And this topic is looking at IAS 20 on accounting for government grants and disclosure of government assistance. Accounting for government grants and disclosure of government assistance. So the first thing here is there are two key things I'm seeing here. One is government grants, and another one is government assistance. Are they the same thing? No, they are not. So government grants is more specific because government grant is more of government transferring, is a transfer of economic resources to an entity that has met some conditions in the past or even in the present, past or present. It could be future, right? It could be a future condition. So the government is transferring economic resources to them. And if I want to define it completely, I would say that a government grant is assistance by government. Assistance by government to transfer. So government grants is under government assistance. Is an assistance by government. Is a government assistance. So the government transfer economic resource to an entity that has met some condition. So government grant is also an assistance, but government assistance is beyond grants, is any action by government, action by government to transfer also economic benefits to entities qualifying under certain criteria. So the difference is in the fact that government assistance is a wider scope than government grant. Government grant is majorly monetary, right? It's majorly monetary. When government gives economic resources to an entity, like subsidy, or when government give and say that, okay, instead of you to buy dollar at 1,000 naira, we're going to give you at 500 naira. That's a grant. Or a company needs loan. Government now says that, okay, instead of you to get this loan at 20%, we are going to give you this loan and you're going to pay interest at 10%. Like they are giving you the loan below market rate, right? That reduction in interest is a grant. Like they're giving you money indirectly, right? Or government says that, because you're facing some challenges, we're going to fund your staff salaries for 3 months. Those are government grants. Or the government says that, okay, because we want to encourage your industry, your company to grow. Okay, when you import the materials you need for whatever you are producing as a company, we're going to waive import duty for you. We're going to waive import duty. That's a government grant. So government is like, it is a transfer of economic resources. It's a cost saving to the company. But government assistance is also a grant, just that it's bigger than just grants. I mean, the government can say that, okay, um, we think that this industry you will need some technical assistance. You will need some training. We can assist you in this area. That's government assistance. Okay, that's beyond government grants, because in that wise, it's not like the government is giving you money. The government is giving you they are including themselves in your business through certain actions. So it's beyond grant. So government assistance includes grants and some other non-monetary benefits that the government gives to you. Okay, I hope you get the picture and you get the difference. So government grants is like government giving you money. It's like the government reducing your costs. You're getting direct monetary benefit from the government. Government gives you. That's government grant. Government assistance, it could be government grants, but government government assistance goes beyond just government grant. It could also include some non-monetary assistance, some non-monetary actions that the government takes to help you as an organization. Now, having mentioned that, it's important you note that if the government now becomes a part owner in your business, and you know that when I say government, don't narrow your mind to just federal government. No, it could be state government. It can even be local government. In fact, government parastatals, any representative of government. So if they are a part owner or a shareholder in your company and you're getting some benefit as a result of that, that is not government grant or government assistance, because you people are working together. Or if you are consummating business with the government, you're transacting business with them, right? That is not government grants or government assistance, because that is happening in the normal course of operation. So what you need to know is that for the two, the way I define government grants, you see that the key to this definition is that there are always conditions attached to it. There are always conditions attached to it. If for both grants, and this one also, you must have qualified under certain criteria. Do you know that this naira for crude that Nigeria is doing with refiners in Nigeria, it is a government assistance. It is. If they want to account for it properly, the savings they are making between, if they were to buy this amount in dollar, and the margin that the government has to save them as a result of buying it in naira, they need to account for it as a government grant, because it is a government grant. Okay, so we can go on and on with that. And also, let it be known that if you get a grant from an international community, it is a government, you can qualify under government grant as well. They gave you a grant. Now, okay, well, because in this industry, probably you're in education, and we believe that you are helping the rural area, so we are giving you this. You can account for that in accordance with IAS 20. So that's government grant, and that's also government assistance. Okay, that being said, right? If you have forgivable loan, for example, now, I mean, that's just another example of government grant. The government says don't pay a particular loan anymore, that we are giving it to you. That's also going to be a government grant. Okay, so there are two types of government grant. So you see that going forward now, I'm going to focus more on government grant, and you can guess why. Because it's the one that has to do with money. And that's why the standard IAS 20 talks about accounting for government grants and disclosure of government assistance. Because any assistance that is not a grant, you cannot account for it. You cannot measure it. The best you can do is to disclose it because they are non-monetary. You just have to disclose them. And that's why the topic of this standard goes that way. Okay, so two types of government grants to look at very quickly. There is grants related to assets. That is government grants related to assets. And there is government grants related to income. And as the name implies, for grants related to assets, these are grants in which the condition attached is that the entity must acquire an asset. Then the government can subsidize the asset for you. Or the government can even give you an asset. They can give you an asset for free. So when we have grants related to assets, so two things here is like the government says that, okay, the condition is that buy an asset, then we'll subsidize your assets. Buy an asset, we subsidize it. So the government says the condition attached is that buy an asset. So the government will then subsidize the acquisition of the assets. Or the government says that the government gives you an asset for free. The government gives an asset to the entity for free. That's grant related to assets. You see, any grant where the government is not giving you an asset or they are not subsidizing acquisition of an asset, then that is grant related to income. So it doesn't have any special definition. Any grant that is not related to assets, we will call that grant a grant related to income. Now, how do we then account for this? How do you then account for this? Very straightforward. In fact, before you can even go to accounting for it, before you can even think of recognizing it in your books, the criteria is that there must be a reasonable assurance, a reasonable assurance that the entity will meet the conditions, fulfill the condition attached to the grant. Because if not that you have met the condition, you don't have to have met it. Well, if you have met it, then that's fine. Okay. But the key recognition criteria is that there is a reasonable assurance that you will meet it. This is the major criteria that, I mean, from all indicators, we believe that this company is going to meet this condition. And also, the second one, that, okay, of course, when you meet those conditions, then you are definitely going to get the grant. you are definitely going to receive the grant. Now, if there's reasonable assurance that you meet those conditions, then you can go ahead and put it in your books. Then how do you account for government grants? Very straightforward. So first, if it's a grant related to income, all you need to do, in fact, there are two methods here. If it's a grant related to income, there are two methods for accounting for it. Number one, deduct the grant from the carrying amount of the assets. It's just like you bought an asset for 100,000. Government now says, okay, we'll give you 20,000. So that means, in this case, all you're doing, the government is giving you money, so you debit bank, abi? Do you know what you credit? Asset. So the value of the asset in your book would then be 10,000. You debit bank, you credit assets.
Hello, sir. Can we ask question in that area?
Yes, please. Yes, please.
Okay, thank you, sir. When we intend to buy assets and we know that the government is ready to give grants in that, remember that the cost of the asset will be the purchase price plus other attributable costs. We add all those together and we less that grant from it. Is that what you say, sir?
Exactly.
Okay, thank you, sir.
You're welcome. So when you do that, that's all. So the impact of this is this. The cost of your asset becomes reduced, which ultimately will impact depreciation that would be recognized in P&L. So that's the first way, which is quite straightforward. The second way is to set the grants as a deferred income. That's what the standard said. It said set the grant as a deferred income. Now don't reduce it from the cost of the assets. Set it as a deferred income. And you see, setting it as a deferred income, it means that by the time the government gives you the money, you debit bank. We are saying a credit deferred income. Yes, meaning that these grants don't recognize it as income in your books yet, now, today. Because the condition is that buy an asset, use the assets. So these grants would then be recognized to P&L over the useful life of the asset. So if the useful life of the asset is 5 years, the government gave you a grant of 5,000 naira. You see, by the time you debit bank with 5,000 and credit deferred income with 5,000, at the end of every year, you will systematically spread that 5,000 over 5 years. If you are spreading the depreciation of the assets over 5 years on a straight line basis, the grant income also, this deferred income, you are also going to recognize it to P&L also over 5 years on a straight line basis. If you are using reducing balance basis to spread the depreciation of these assets that the government has helped you to buy, the grant income as well, you are going to recognize that also to P&L using that same reducing balance basis. Because since the grant funded the assets, we believe So we expect that you are going to recognize that grant also to P&L. Don't just dump everything to P&L once. That would be very wrong. So these are the two ways that we are definitely going to look at relating to government grants related, I said related to, is related to asset. Government grant related to assets. Okay.
Hello, sir.
Yes, Ahmed.
Okay. Yeah, well done, sir. Before we move forward, the introductory aspect of this topic, when you made mention about the government grant and the assistance, can we say empirically that government assistance or grants are not redeemable or are not being paid back?
Oh, good question. They can be repayable. Those have not gotten there. As you can
Okay.
see, that the recognition criteria is that there must be reasonable assurance that you meet those conditions. If you don't meet those conditions, you will pay back. Oh, you will pay back.
What if somebody meet up those conditions? You are not paying back.
You're not paying back. Oh. You're not paying back.
Okay, if that should be the case, sir, what can we consider back of industry loan to organize so many organizations or industries in Nigeria as a grant or as an assistance?
It's none of the two. It's none of the two. So the only way, the only instance is the interest rates, the below market interest rates that they are getting, that they are paying back. That's the grant element there. Because if you have gone to the bank, you will have paid interest of, let's say, 30%. But if you go to BOI, you're going to pay interest of, let's say, 7%. That 23% savings is a government grant. Ahmed, are you there?
I'm okay, sir. Thank you.
Okay. Okay.
Sorry. I have a question. It's just for clarity. The two
Okay.
method you mentioned, is it just
Yeah.
for grant of assets or the both for income
Is
and
grant
assets?
is just for assets.
Okay.
It's just for assets, yes. It's just for assets. In this topic I'm teaching you today, what I'm pausing a little bit is this is just the most important thing here. How to treat these two. And it's quite straightforward. Now, before I move forward, there is this one. If government gives you an asset for free, if government gives you an asset for free, note that you would have to then determine what amount you are going to put that asset in your books. And that amount you have to put in your books is the fair value of that asset. If the government gives you an asset for free, you would have to get the fair value of that asset. And it is that amount you are going to put in your books as the value of the asset. If the government gives you an asset for free. So, but if the government, this two is if the government subsidize the acquisition of an asset for you. So that is where this one can fly, where you will deduct the grant from the carrying amount. And or you set the grant. It's either of these two, not these two, or you set up the grant as a deferred income. So which is majorly what you will find in your exam. But I just need you to note that in case if they just mention it one way or the other, know that if you get an asset for free, it's going to be measured at the fair value of that asset. That's how you're going to measure that asset. The second one which is grants related to income. So any other grant that is not related to assets would therefore be related to income. Whether the government says maybe you want to do a training for your staff, they decided to give you 5 million, okay, use this to support whatever it is you are doing. Any grant that you get from government, or like the one Jamie asked me, you get a below market rate, that savings you're getting is a government grant related to income. Any grant that does not involve assets is definitely a grant related to income. And when you have a grant related to income, two methods also to recognize such in your books. Number one is either to present the grant as a separate line item in P&L. But see, listen, you know that before you can get a grant, it is expected that you must have met a condition, or you will meet a condition. If you have met the condition in the past, that you have already met the condition, and the government now say, okay, we want to compensate you. We want to compensate you that take this grant for free. That's not take this grant for free. For the fact that you have spent money, take this grant to refund you for your money. Such grant is going to be recognized immediately to P&L. But if it is a grant that you will have to meet a condition in the future, then you might not be able to recognize that grant to P&L immediately. If it will take you 2 years or 3 years or 4 years to meet those conditions, if it will take you that long, then that means this grant, you would have to set it up as a deferred income first. You have to set it up as a deferred income first. Then you will systematically then recognize it to P&L over those years. Over those years. So this first method depends on how long it will take you to meet the condition. If you are meeting the condition immediately, or you have met the condition, recognize whatever amount they are giving you to P&L in year one. Everything P&L as an income, as a grant income. But if it's going to take you more than 1 year to meet those conditions, that means you have to recognize those grants over those 2 years or over those 3 years. So that means if they are giving you the grants, let's say the grant is, let's say 2,000. So the bank, you debit your bank and you credit your, to be deferred income now, because now you cannot recognize it over, you are not recognizing it immediately if it's taking more than 1 year. So at the end of every year, if it's 2,000, so that means in year one now, you come and debit deferred income. Okay? And credit P&L grant income with the remaining in year one. In year two, you do the same thing. You debit deferred income. You credit P&L like that. Okay? So over the period, your deferred income gets write-off, and you will have recognized the grant income to P&L over the 2 years. The second way of presenting this grant related to income is to net the grant to net the grant against the related costs. You net it against related costs. So if the government gives you a grant of 1 million and the related cost is, let's say, 3 million, they subsidized the cost of the grant for you. All you just need to do is just to net off against the related costs. So the cost you incur is 3 million, but the government subsidized 1 million. So that means it's in your notes somewhere, you do 3 minus 1. Then what will show in your books is just net of 2. So that is also an allowable way for treating grants related to income. And this is all for IAS 20. So now you can ask your questions. There's a question here. Somebody's asking me, Abiola, what would be the accounting entry? You're not. So somebody's asking, what would be the double entry for if the government gives you a grant for free? What will you debit? You debit the assets. What are you going to credit? Is there anybody that can, from all the explanation that I've done today, who can try? We have been following through. Yeah, it's actually P&L. Oh, so we will not go to P&L. You have tried that you should go to P&L. That's quite logical. Ibukun said bank. No, you can't credit bank because it's not like you're paying anybody. He's actually in front of you. So Aisha was close that we should recognize to P&L, but you cannot recognize everything as income in year 1. I didn't miss a grant, but where now? So, sorry, what is it?
Deferred income.
That's correct.
Deferred income.
Thank you very much. Thank you very much. That's correct. That's correct. Yeah. It's deferred income. You credit to deferred income. So systematically over the useful life of the assets, then you'll be transferring this deferred income to P&L gradually. You'll be transferring it to P&L. So it would be wrong for you to just dump everything to P&L in year 1. No, it's better you recognize it over the useful life of the assets. That's a better way of matching the top with the expense or with the income. So this is all the explanation. So what is left is just for me to look at the disclosures. Okay, somebody wants to ask a question.
Yes, Mr. Hussein.
Yes, please.
Good
Okay, Wasu.
Am I audible, sir?
Yes, go ahead, please.
Okay. I'm actually coming from the aspect of cash flows.
Okay.
I'm looking at it as cash flows, and the parent company I was given a grant from the government, and I wanted to recognize it, just the same similar location you gave. I wanted to recognize my assets and the deferred income. So
Okay.
I'm looking at where I will reflect it. Is it cash flow under investing activities or financing? I'm thinking it should be financing, but since I'm actually recognizing over time, how will I go about it in financing activities?
Okay, so for statement of cash flows, IAS 20 requires that if it's grant related to assets, so you have to separate the grants that you received from the assets. So the assets would go as grants, will go as investing activity normally. Okay. But the income itself can easily go as operating activities. It can fly as
Mean the
part.
income that is due for that period or the entire income?
So you know that for statement of cash flows now, you would in your statement of cash flow, what you would see there is the money you received, the one of.
Yes.
Okay. So you can go in as part of your operating activities then.
While the second leg reflects under financing.
So the asset itself, if it's a grant related to assets, so that's where you have two items because you have bought an asset, okay, that will come in as investing, and you have gotten a grant, which is to fund your operations, which can come as operating activities, can come in operations, but it can also come in as financing. The standard really didn't really specify that. So depending but we are comfortable putting it as operating activities. But if it is a grant related to income, okay, so that one that one does not have anything about assets. It's just the grant and that grant itself. You can just dump it as part of your operating activities, and you can put it as part of your financing activities as well. Either of them is fine as an income. All the money you received, it shows there. So either of the two is fine since they didn't specify. So, but we'll just put it in financing like that because we'll just put it as part of operating for the most part because it's not like you were the one that funded the business or you did not borrow the money, neither was it that it was the owners that brought in the money. It was an external person that says, okay, let me help your operations. Then use this to support your operational activities. So that's why we are considering it mostly because it's an external, non-related party that is giving us the money.
Okay.
Okay, so Latif is looking at some few examples under grants related to assets. So grant related to assets is, for example, let's say the government says that you should that if you buy a tractor for farming that you're going to use for farming, then we are going to give you or subsidize or give you back 20% of the costs of that money. So that could be a grant related to assets. So whatever assets that you buy, if the government says that, okay, if you buy this asset and use it to do this, they will give you some of the money. But there was a time when government was doing Anchor Borrowers Program, but that one it wasn't that they would buy an asset. But any instance that would result in the government saying we'll give you some money back because you have bought an asset, because we ask you to buy an asset, and that's grant related to asset. So for grant related to income is any other grant. Like I've mentioned before, if the government gives you a loan below market interest rates, if the government it gives you like some money to train your staff, that money that you collected from government is a grant related to income. Or it's possible that government can help you pay your staff salaries. It's possible. If it happens like that, that money that you collected is a grant related to income. So it's not common in this part of the world. They hardly give anything. Now, the disclosures required. So, number one, when it comes to disclosure, from all we have said, one thing that's important is that you must disclose the conditions related to the grants. And under these conditions, you will tell us that you must, in fact, you have to state the ones you have met and the ones you have not met. What are the contingencies attached? You need to tell us. Number two is the nature and extent of the grants. You need to tell us the nature and extent of the grants. Is it a grant related to income? And is it a grant related to assets? And you need to disclose how you have chose to present it, because you need to tell us, otherwise you might not really know. So presentation of the grant. So majorly, these are the few disclosures requirements that we need to be told. And finally, before I go to a question, is, lest I forget, repayment of government grants. Because it's possible that you don't meet the condition. If you meet the condition, government grants, we don't expect you to repay, because they have given you. Nobody's asking you to. If you are repaying, then that one is not a grant. It's just the savings there that might be the grant elements there. So if you don't meet the condition related to a grant, that means you have to repay back. So, and don't forget that it will not affect so many things. For example, now, if it's a grant related to assets, don't forget that you have already reduced the carrying amount of the asset by the amount of the grant. Now, they now ask you to repay. So first, IAS 20 says you should treat it as changes in accounting estimates. Is a change in accounting estimates. And this estimate, so we are saying this just so that you don't have to treat it retrospectively. Don't go and start adjusting your books of previous period. Especially if you met year one condition, in year two, you did now not meet the remaining conditions. So that means you have to repay back the loan. You have to repay back the loan or the grant to the government. So you will treat it from year two going forward. You will treat it as a change in accounting estimates, not retrospectively, but from the date you fail to meet the condition. That is how. So the amount you are repaying, depending on the amount, okay, depending on the agreement you signed, it could be a portion you are repairing, that you are repaying back. It could be everything. But if you are repaying, so by the time you are crediting bank, it means that you are going to debit the assets, increase the carrying amount of the assets. Increase the carrying amount of the assets. That's one way when you have to repay the grant. Number two is if you have treated it as you are setting it up as a deferred income. So whatever is the balance is in the deferred income. Okay, so you would close the deferred income account. Deferred income account with the grant repayments. The grant repayment. Okay, so these are the extreme one. Now, somebody's asking who qualifies for this grant. Anyone can call, any company, any entity that can qualify for this grant, provided you're able to meet the condition that is laid by the government. Any entity can qualify. Any entity can qualify. Okay.
Hello, sir.
Yes, Latif.
Thank you, sir. I think the last example you just gave now, the accounting entries, That should be for grant related to income. We'll credit bank and we'll debit deferred income.
Yes.
Thank you, sir.
So let's put figures to all of these things I've been explaining hypothetically. So let's look at the time they asked it. So there was a question in 2020. It says that the federal government of Nigeria is committed to improving medium, small, and micro enterprise program. In view of
Sorry,
this,
sir.
yes.
Yeah, I'm so sorry to interrupt you. Please, could you just go back to that repayment of the grant quickly? Let me
Okay.
screenshot it. Okay, I have it. Thank you, sir.
Okay, so the federal government of Nigeria is committed to improving medium, small, and micro enterprises program. In view of this, the government issued directives to the Central Bank of Nigeria to give grants to MSMEs that has at least 25% local equity participation. Okay, required. Explain the two types of grants or government assistance that are recognized by IAS 20 on accounting for government and the structure of government assistance. Number two, outline the two methods of presenting grants or government assistance that are recognized by IAS 20, accounting for government grants. Okay. This is so from what I've explained so far, what are the two types of government grants that we have? Anybody?
Grant
related to assets and
And
related to
related
income.
to income.
Fantastic. And I'm sure you would be able to explain that in the exam, that the grant related to asset is the one where the condition attached is that the company must buy an asset and then government subsidizes it. Or government can even give the company an asset for free. At this point, we recognize that asset in our books, we measure it at fair value. In that regard. So they said outline the two methods of presenting grants or government assistance. So who can help us with this?
You deduct the grant from the carrying amount of the assets.
Deduct the grant from the current amount of the assets. Okay.
By
What's the
debiting
second
the
one?
bank and credit the assets.
Okay, that's correct. What's the second one?
Or you recognize it as a deferred income.
Set it up as a deferred income. That is absolutely correct. But that will not give you 8 marks because you have only mentioned how you present grants related to assets. How about grant related to income?
Present the grant as a separate line item in P&L
That's correct.
if you meet the condition that is recognized.
Yes. What's the
Then
second one?
secondly, net the grant against the related costs.
That's correct. Absolutely correct. Good. Then I will have given you the complete marks for this. That was very magnanimous. I like you answering this type of questions in the exam. They always put plenty marks there. So I don't joke with them. All the principles I'm teaching you, don't just jump to calculation and be solving. It's not so much about that. You'll find a lot of principles in your exams, a lot of it. There was a student that inspired me to do what do they call it? Like a marathon class, which I'm actually thinking I might do and I may not. I've not actually done it before, where we'll just do like a long hour revision where most lecturers would have finished. We'll just go for like 6 hours solving past questions together. Very close to your exams. We'll just be doing that. but I will still sample opinion and see if it's something we would want to consider. So the B part is saying that during the year ended June 30th, 2019, Bugbonishe Enterprises, having qualified for the 25% local equity participation, received the following grants from CBN. Okay, so this guy qualified. So let's see the grant they gave him. On September 2018, a grant of 1 million was received from CBN. Okay. The grant was in respect of how much? What was in respect of training of casual workers. Okay. The grant was in respect of training casual workers. So the training cost incurred by Bugbonishe in this respect was 1.75 million. Okay, if I may ask, is this a grant related to income or grant related to assets?
Income related to
Income.
Okay, that's correct. Number two, that's correct. Number two, he said on November 1st, 2018, Bonishi Enterprises acquired plant and equipment costing 8.75 million and received a grant of 2.5 million from CBN in respect of this purchase. The plant and equipment, which has a residual value of 1.25 million, is depreciated on a straight line basis over its useful life of 5 years. What type of grant is this?
related to assets.
Assets.
Related to assets.
Correct. Number three, on June 1st, 2019, a grant of 2.5 million was made by grant was in respect of relocation costs that Bugbonishe Enterprise had incurred from movement of its for movement of its staffs to a free trade zone allocated to medium, small and micro enterprises. The grant is repayable in full unless Bugbonishe Enterprises recruit at least 100 employees from the free trade zone local area by the end of the month of June 2019. Bugbonishe is finding it difficult to recruit this number of employees in the local area. What type of grant is this?
Income.
Okay, now there's something about this one. They said that for this grant, they said Bugbonishe must recruit at least 100 employees from the free trade zone area. They now say something here. Said Bugbonishe is finding it difficult to recruit this number of employees in the local area. That means that these grants not go to P&L. Not recognize it to P&L. Because it's looking as if they said the grant is repayable in full. That means he might repay. So we have to put this one as a liability. Don't even take it to P&L at all. You put it as a liability. That's why we're going to treat this 2.5 million. Because it's finding it difficult to recruit, to meet the... So there's no reasonable assurance that he will meet the condition. You will see. We're now asked to prepare an extract of statement of financial position and statement of profit or loss of Bugbonishe Enterprise for the year ended June 30, 2019, using the two methods of presenting grant in the financial statement. Okay, let's do this. Let's quickly do this. So, even the examiner have told you that using the two methods. So, okay, let's say method one, which is to deduct the grants from carrying amounts. And I'm going to match that with this, the one for related to assets and net against related income That's for grants related to income. That's for grant related to income. So this one is for grants related to assets. Okay, so grants one. How much was that one now? 1 million. Okay, so there's a training expense. There's a training expense of how much? 1,750,000. No, grants one is 1 million. They gave him 1 million.
Okay.
So the training expense itself is 1,750,000, and the grant is 1 million. So if I net them off, I'll be left with a net training expense of how much? Of 750, right? So grant two. So this grant one was 1 million. How much was the grant two? That's 2.5 million, and this is related to assets, right? Okay. The cost of the asset was 8,750,000. So grant two is 2,500,000. So we say we want to deduct the grant from carrying amount. So what's the cost of the assets? 8 million.
807.
There's something I'm not doing. I'm not putting the level I wanted up. So you deduct the grant, Abi? Which
Yes.
is 5 million. So
500.
what's the balance? What's one the cost?
6,250. 6.250.
6,250. Okay, so is this 6,250 that we are going to work with for our depreciation? So for this asset now, what's the depreciation per annum? To be the cost minus residual value
Residual value.
over what?
Useful life years.
Over the useful life of the assets. So in this case, the cost now is how much? 6,250. The cost is 6,250. How much is the residual value? This is the residual value of the assets, 1,250. Abi? 250. And what's the useful life of these assets? 5 years.
5 years.
5 years.
Okay. So how much would that give us?
1,000.
1,000. But can we recognize the whole of the 1,000? No. A lot of students failed this because they failed to realize that the government actually gave them the grant in November, and the year end this company is in June. So this depreciation year is for 1 year. It's for 1 year, whereas the asset has only been in existence just for November, December, January, February, March, April, May, June. Just for 8 years.
8 months.
So we're supposed to just for 8 months, yeah, please. So if we prorate that, how much did that give us?
8
as
over 12.
67.
67. So that means at the end of the year now, how much is the carrying amount of these assets, which is the costs of 6,250 minus accumulated depreciation of 667. So what's our carrying amount?
5583.
5583.
83.
Okay, so that's for the first method. That's the workings for the first method. So for the method 2, which is to set up the grant, why I'm not actually looking at this third one, because all I just need to do for this is just to present it as a liability. That's why I don't need any workings for it. I will just present it as a liability. So for the method 2, set up the grant as a deferred income. That's for grants related to assets, and present the grants as a separate line item for grants related to income. So for the grant 1 for 1 million, so you don't need to set it off. You just present it separately in P&L. For the grant 2, the one of the 2.5 million, in that wise now, the cost of your assets remains the cost of your assets. Just that this grant becomes a deferred income. Okay, you have a deferred income of 2.5 million at the beginning. And in that wise now, since the cost of your assets will not change, so the depreciation per annum of that asset becomes the costs which nothing is would touch. 8750 minus residual value, which is 1250, divided by the useful life of 5 years. So how much will that give us? How much will that give us? Anybody? 1,500. Don't forget to prorate it by 8 over 12. How much did that give us now? 1,000.
1000.
Okay. So in this case now, the carrying amount of these assets will be how much? Will be 8250 minus depreciation of 1,000. That will be 7,250. Abi? So who can tell me how much grant are we going to recognize in year 1? What will be the grant income in year 1? What will be the grant income in year 1? It will be 2,500,000, which is the grant.
500.
Okay, that's logical. Divided by 5 years. That'll
5 years.
give us 500. Paid how much? 500,000. that
There was
correct?
still, you wrote 1 million there. It's supposed to be 1,000. No, you wrote 1 million.
This one?
No, carrying amount. 8,250,000 minus.
Okay, I think this one should be 1 million, Abby.
Yes.
Yeah, this one should be minus 1 million. Okay, we're talking about this grant income. You know that we are setting it up as a deferred income here, which is the method 2. This is the method 2 we are using here for the grant related to assets. So we are setting it up as a deferred income. So it means that don't recognize everything in year 1. So we are going to find a way to spread it over the 5 years. And the way we usually spread it is the same way you have spread depreciation on the asset. So like somebody said 500, but where the person got it wrong is that you need to prorate this one too. The same way you prorated the depreciation for year 1, you have to prorate this one too. So how much will it then come to now?
333. 333,333 naira.
Good. So my statement of profit or loss, so the examiner wants you to use the 2 methods to present. For method 1, my training expense would be, where is the method 1? Would be this 750 from these workings here. If you had labeled the workings, we just refer to it. Then our depreciation, where's our depreciation from method 1? 667. Our depreciation from method 1 is 667. Then my statement of financial position under non-current assets, I will have my plants and the carrying amount from method 1. What is carrying amount from method 1? This one, 5583. Okay, and under current liabilities, I would put grant repayable. Don't forget that grant 3 that we might repay. This one, this grant 3 that we might repay. This 2.5 million. So that's method 1. For method 2, I will have my statement of profit or loss, my training expense is 1,750, and my grant income is 1 million. This is the one relating to training. And also, there is a grant income related to the plants, the asset that I bought. This 333.333. But since I'm recognizing it as a deferred income, and also my depreciation from method 2, 1 million. 1 million. Let me not forget to put this. Yeah. Okay. So Again. So again, my statement of, so just to separate the ones that are income and the ones that are expense. So let me just put those ones as expense in jackets. So my statement of financial position, my non-current assets, the plants, how much is the carrying amount? For method 2, got 7,250. Then under my current liabilities, I will have facts. Let me put it as non-current because it's over 5 years. I will have my deferred income, which is how much was the total grant? 2.5 million. And how much have we recognized in year 1? Just this 333. So how much will now remain in deferred income? Can you give me the difference?
2,167,000.
2,167,000. 2,167,000. And the grant repayable is the 2.5 million. That's the end of this question here. That's the end of this question.